last week we did a webinar, which was kind of like interview style with my buddy Otto or OG, who is one of the Sepia group leaders. And the Sepia group, they call the home of the Strat. The Strat is an amazing system for trading that I wanted you guys to get exposed to. I think everybody does it a little different also. What I wanted to do, because the first one was just an overview and it was a lot to take in, I wanted you guys to get an initial overview with OG. And he gave you a quick initial exposure to what the system, the strat is. And if you're new to trading, it can be a lot, right? And so I don't expect anyone to really get 100% of any of this at once. It's just way too much, to be fair. So now that you have some understanding of what the basic system looks like, I want to take that just one step forward. And what I can do here is I'm going to show you guys how I apply it to my trading system on a day-to-day basis. We're going to go through a couple different things, specific indicators, exactly which pivots, I'll call them pivots, that I use and how. And really just kind of leave you guys off with hopefully clarity on how to actually implement the system now that you understand the general scenarios, what the setups look like, and things like that. But again, just as always, I got to start off, read this disclaimer before we get started. Just trading is not for everyone, so consider whether it's suitable for you considering your circumstances, knowledge, financial resources, etc. Cool. So this is all from last week, and I'm hopefully going to be able to keep this fairly quick. And if you guys have questions, go ahead and type them. If you could type them in the Q&A section on this versus the chat, I'll try to get the chat, but I'm going to try to flow fairly quickly for you today. So we have an overview, right? So generally speaking, there's all kinds of technical analysis, but if you're new to trading, how do you really separate what the good stuff is and what's the bad stuff, right? If you're going off patterns, everything that you find out there, it's all completely conditional. Well, this has to meet that criteria for this to work, and then everything else has but if it doesn't work, then this is what happens. So in the strat, the beauty of it is there's none of that. It's just crystal clear. This is going to happen, and then you can expect that. People get a little chopped up sometimes when you have some of these like fake out type movements, and we're going to dive into that just a little bit more and why that's important also. It's not the basic technical analysis, right? We don't use RSI or any of that kind of stuff when it comes to strat. We're talking about what's called price action and just raw price action. None of this, this shenanigans, right? Like this, I was looking at this the other day. It's so funny because like this specific, what is it, bullish wedgie? It's like this setup actually has happened quite a bit, and we literally trade the failure of these. And I was like looking at these, I'm like, dude, hilarious, because the cup handle, okay, break, whatever, like that this stuff legit happens. And so with the strat, you won't get faked out with this kind of stuff. You'll know to expect when these kind of things can happen, and you'll be able to differentiate like, oh, this is something that's tradable, whereas I need to be watching out for X, Y, or Z. Everything else is going to be subjective. Everything else in terms of technical analysis really depends on what time frame you're specifically looking at, and is only valid for said time frame. Yeah, too funny, Rowdy. And technical analysis, they have something called measured moves a lot, but what you'll find out is in this market, if you're trying to trade for an entire measured move, well, it doesn't really give you a way to measure the progress as you're getting towards that move. Whereas the strat will, it's not going to tell you to shoot for the moon and buy like some wildly far out of the money, whatever. You might do that on your own. Sometimes I'm guilty of that as well. But it's going to give you realistic targets and very clear exits. It's just going to be a matter of whether or not you're paying attention to when those things happen for you to be able to make money in the market or not. So again, nothing conditional, right? Works in any market. Doesn't matter if you're trading bonds, Forex, futures, assets, crypto. It's across all assets on any time frame. when we looked at the strat, right, one thing we kind of glance over, and I'm going to assume that you guys know the scenarios and we can do a quick review. But today, what I want to do is actually go through really some of these setups and how to trade them. So what I will say is that the the setup is, they call this the combo sheet, right? And it's a sequence, a specific sequence of scenarios or candles. And when I started learning and when I talk to people about trading, I'm always talking about a 2 to 3, what's called a 2 to 3 candle setup, right? And so if you look at this strat, and this is what, I mean, just out of the gate, why I fell in love with it was, I mean, what is this? These are all 2 to 3 candlestick setups. That's exactly what they are. And 2 to 3 candlestick setups are what works, period. The question then becomes, well, when do I trade these specific candlestick setups? Because these setups occur on every single time frame, on a 15-second time frame, 30-second time frame, on a monthly time frame. So understanding which time frame to focus on in terms of looking for those specific setups, that's what we're going to focus on. And then as you're in a trade, we're actually just going to be looking for a continuation of that exact same setup on the smaller time frames in order to tell us to stay in the trade. Once you have a different setup, then you're going to close your trade. But if you have it, it'll enable you to really enter at the best possible time, and you're going to exit at the best possible time also. If you're looking at something like my trades, things like that, I'll typically end up with probably a much higher percentage win than most. And that's because a lot of the exits that I'll have are at the primo exit point, right? And so we'll walk you through essentially how to find that and how it really works. So again, we're going to be looking in general 2 candlestick setups to 3 candlestick setups here, and we're going to go through the scenarios. So there's 3 scenarios, 1, 2, and 3. So scenario 1, scenario 2, and scenario 3. That was the basic understanding of what you should have left at minimum from last week. And so scenario 2, it's just another way of saying something called an inside bar. When we talk about inside bar, we're inside, outside, or directional bar. Either way, we're referencing the bar in front. So if this is the bar in front and this is the 1 bar, right? And the 1 bar is a scenario 1 or a inside bar, that means that this is inside the entire length of the prior candle and just the very prior candle. So if you're looking at a month or a week or a day, it's inside the prior day, inside the prior week, or inside the prior month. That's what that is. This setup is going to be the number 1 candle. Really, I could say setup, but this candle type for options, and I'll get into this later. For options specifically, you're going to want to hone in on a inside bar or a scenario 1. Once you can find all the scenario 1s, then you're going to have all of your setups from there. Because if you look at it, every real setup begins with the scenario 1. Also, in terms of options, an inside bar means that price has consolidated, and therefore volatility is low. Does that make sense? And when we're trading options, we want to buy low volatility. So for you guys that are new and you're mostly buying options, this candle, this inside bar setup is going to be critical for you guys to learn to understand and find. And this is exactly what you're going to be looking for. So Ariel's asking, how can I use this on the time frames less than 15 minutes how can I use this on the time frames less than 15 minutes? And is it as effective? Yes, it is. I'll absolutely get into. We're gonna have fun. Bright's asking, couple of situations when it's a 113 or 223. How do we take entry and exit? Beautiful. I'll be sure. So let me run through this, and then we'll jump into some actual scenarios. Isn't it harder? There's smaller price targets. Yeah. So remember why I'm trying to focus on this. You guys, when you're looking at at your setups, this inside bar setup, this is the one that you want to remember. So you want to be looking, and if you're looking at your chart, you're waiting for an inside bar setup. That's gonna be what you're hunting for on all your charts. Okay, scenario two, this is the one that's going to be profitable, right? So we want to get into a trade right as a scenario two is happening. So if you were to imagine the bar in front of this two was an inside bar, right? It would look something like this. Big, direct, maybe it was directional like this. So coming down, you're looking for this beauty right here. And maybe it comes in here, and at the break of this candle right here, that's when you want, if this was a chart, this is your primo entry right there. And as it's going, right, you might get a 1 bar right here. This is your warning, right? Like warning, warning, will rock. Do not, watch out. Once you're once that starts coming in, then your volatility is coming in and your premiums are losing. OG said last week that we want to exit into strength. So this is that exact, sorry, I'm like shooting from the hip, but this should help you out. We want to exit into strength here, right? So you want to exit, if this was your target somewhere in here, that should be your trimming at that point. You get another 1 bar, inside bar, and the following bar breaks below. That might have been your trigger entry here. If you miss that, all you're doing is you're just looking for that very next setup to tell you that you're staying in the trade. So if the next bar continues down, I'm staying, right? Next bar goes up, I don't have my stop because my stop is here. I'm staying, it keeps going down, right? Like your stop might turn into this. This guy continues down, I'm staying in the trade. Does that make sense so far? The one that gets confusing for people is this outside bar. And so what's important to know is that they exist. And today we had a wild situation to me on the cues. I was looking at, there was 2 threes in a row. So the cues were 3 down, 3 up, 3 3. It was wild. In our group, I was talking to Steven when we were going back and forth yet last night, because a huge wild day yesterday. And I'm like, who bets that we open up red just to flip massively green the very following day, right? But you wouldn't necessarily be thinking that way if you didn't understand that this outside bar scenario exists, right? And if you don't even know that it exists, you're definitely not looking for it. So what we'll go through is how I trade it, because it might be a little bit differently. Do we have Bobby in here? Or DD? I got some other strat traders here. Let me see. Probably not. If anybody's strat trader, just ping in chat and I'll bring you up. And you can share your experience too. But for now, we're just going to mental note that outside bars exist. They're equally tradable as the inside bars. So the 2 types of bars that you really want to hone in on, number 1 for your primary setup is going to be inside bar. That's your primary, setup candle that you're going to be hunting for. And the second one is going to be the 3 bar or the outside bar. So if you're going to put numbers on any of your bars as we go through and I show you guys indicators, just label 1s and 3s. The 2 bars, they're the directional bars. Those are your profit bars, right? This kind of situation where you're entering long here, it's going up, up, up. You'll get a stall like this. Here's your stop. Okay, cool. Maybe you got stopped out, maybe not. But at this is basically where this is during the trade, right? And it's mostly just to determine whether or not you should stay in the trade. So those aren't primary setup candles. The setup candles, again, are 1s and 3s. So inside bars and outside bars. And a couple more questions. Cool. So is it harder to sit as there are smaller price targets under 15 minutes? No. So one of the biggest things that I'm going to go through today is how to filter the noise out, right? Because these setups do exist on any time frame that you can look at, it's really hard to know which ones are tradable. And so, especially with options, what I'm going to give you guys today is how to find not just the raw setups, but the tradable setups, if that makes sense. Because you're right, there's so many setups that we could be trading things all day, literally every day, but are they going to give you enough of a move to make money, especially if you're trading something like options? They're probably not, to your point. So how do you differentiate the good setups from the bad, right? So that's, again, 100% what we're going to be looking for. Okay, so Anonymous asking, after the scenario one is identified, when to make entry next candle is okay. Interesting. I like that. We'll absolutely get to that. Rodrigo's asking, do you ever live trade for us to watch? Yeah, man. We like you hear my voice. I don't think I was not live any second today, and I'm pretty positive that's why I might never regain my voice. but but yeah, I'm live every, I was live on Twitter for most of the day. We do a YouTube video, so just Google or go to YouTube, search Paper Gains, you'll find us. It's a live feed every Monday. um, and I'm probably going to start some Twitch. I should probably do that. Okay, so now where can we find recordings of these? Okay, so this specific, so again, Paper Game. So go to YouTube, search Paper Gains. You'll find a bunch of videos on there. We do the weekly trade plans live uh, every Monday, and we also have some older series of some of these webinar courses. I will tell you that what you're going to learn today is kind of like, for lack of a better term, it's going to be intellectual property, right? So this specific recording is not going to be released to the public. It will be released as a package later on, but you guys are in either our server or our partners. You're part of our community, extended community. So whether it's, I don't know, Asset, Wise Guy, any of the, like, there's lots of servers that we're affiliated with, and those are all of our partner ecosystems. Aurora, Concord, right? Like where you guys have access to this. Sugi, I can't even. There's so many. I shouldn't have named any because you guys are all freaking amazing. So my bad. So, anyways, yeah. So you guys have special access if you're in here, and no, if you're not part of our partner ecosystem, you would have to pay for this stuff. But anyways, so there's that. I'm just gonna skip through and try and get through this real quick. But one thing we didn't really dive into. Oh, look at that blow water. How do you determine to enter in this chart? Oh, you want to go back? I'll go back. So on the three, or we're on three. Actually, you know what? I'll save it. We'll go through yesterday, today. God, I don't know why I have all these whatevers. What do you call these? Motions? Too many motions. So three things, right? So if you're trading the strat, there are three main things to I'll just use, I'm trying to find my tools. Annotate, draw. Three main things to understand, right? So it's signals. When they say actionable signals, this is those setups, right? So in a scenario, this is just scenario one, scenario two, scenario three. That's all that is. And it's just those specific sequence of bars that will give you what they refer to as, what the strat refers to as, an actionable signal. What's really important to understand is this, and the first part of filtering out the noise is to understand that you need to always be looking at least 4 different time frames at all times. And if you're just looking at something that's below 15 minutes, you really, that's where you can get caught trading something where you might get chopped up, you might get stuck in a very funky situation, or you might be just trading against the broader trend, which can be profitable. But at the same time, you got to know, hey, I should probably adjust my targets or make sure that I'm aware that I'm trading against the broader trend, and that therefore I could get stopped out pretty quickly. And if a trade goes against me, it could be pretty violent, right? So what you need to know in terms of time frame continuity is that your most profitable and probable trades will be going with the trend. Trend meaning how many of my time frames do I have? Like, is the monthly candle green? That's all it means. Is the weekly candle green? Is the daily candle green? That's all this stuff means. Is the yearly candle green? That's it. What you also want to have an idea of is at what point will a monthly, weekly, daily candle flip from red to green. And so at this point in the market, specifically, what day is today? Thursday? specifically Tuesday, Wednesday of last week of this week. Was it this week? Yeah, that monthly candle before was about to flip. And so if you didn't know that, then you might have been like, oh, that's when you start to see, well, there could be a better trend reversal happening. And now we're starting to see a little bit of that right now. So today is, what's the date today? Somebody, the 2nd. So we're 2 days into a new month's candle. That's what you should be thinking of. It's Thursday, I'm 4 days in to the week's candle, right? Always think in terms of those monthly candle, weekly candle, daily candle, hourly candle. For options traders, you could take an actionable signal on a 15-minute candle. Those are going to be your better intraday scalps. And you can use something smaller like a 1, 3, or 5 minute to really get you that precision entry. But that's how you use it. And in terms of broadening formations, this is really critical to know that, so of the 3 things that if you're trading the strat, you must be thinking all of these 3 things at once. If you're only thinking about this, you're not trading the strat. Just to be fair, right? Like that's not what the strat is. The strat is 3 things that you must always be thinking about. And if you're not thinking about that, you're doing your own thing and you're off book. But just remember, time frame continuity and broadening formations, right? So these are going to be really good setups. And I'll get into today's candle and yesterday's. But remember, OG was telling us a 3, like an outside bar, always 100% of the time starts out as a failed 2 or a failed continuation. So a 3 means that it starts out like it's going to continue with whatever trend it looks like, but then boom, it flips, right? And so you have to know at what point will it flip. And this is really the biggest situation where people get kind of caught up. But if you're not thinking about this all the time, it's easy to get caught up and not realize what's happening. And again, it's really, it's an everyone kind of thing. I'm going to go back to one sheet, right? So you remember this? So on this, how do I annotate? No. So on this, oh, bother. Sorry, guys. Where is it? Wow. Where did it go? I'm going to have to chop this out. There was, where is it? A 3, 2, right? So these two 2-bar setups, they're actually 3s, right? So a 2-bar, and some of these are 3-bar setups. So all this stuff in here, we're going to need to take note, right? So anything with 3, these are harder ones to trade, but right here, this situation, these are where you want to do it. So if you look at it, right? Drawing tools. God, these drawing tools. So I'm just going to hone in on these 4 real quick. So it starts out as a continuation down, but at a certain point it fails and it goes up 50%. You guys see that? Same thing here. So if this was an inside bar, this starts up like a continuation up, but at a certain point it fails and it goes down. Same thing, right? Continuation fails, right? So at what point do we really need to take a look and say, well, this is a level that I really need to pay attention to? It's right here, right? So it's at the top or the bottom of the prior candles, regardless of how you are looking at this. Actually, these are not. So we're going to forget about these for right now and just focus here on these 4. So it's the top and the bottom of the prior candle. So a 3, let's see, these 2 really reverse. These are called rev strats. So rev strat reversals. So this is super important. So if you have a bar before and if a day is going to turn up to look like this, I gotta erase all this stuff. Erase, right? It's going to look like that. you have a break of the day of the prior day's high, it's going up. But at what point do you do you get to say, well, it's going to reverse? So the top of the prior day, a lot of times when we're trading, and actually Stephen will look at, sometimes we're trading for a bounce, right? Off the prior day's high, like that. And I'll typically take this entry. But if you're watching this prior day's high or prior day's low, the second that that fails, that's when you get your reversal. So that's how you need to know, like always keep these levels of the prior day's candle on your chart, right? Prior day high, prior day low, and have it on your chart the whole time. So if you're trading the strat, right, and you're thinking that this is a continuation, your first thing is like, well, where's my stop, right? So your stop was your initial trigger. So if that's your stop, cool. That needs to be like, it can come back, that's fine. But once it goes further, well, if it comes down and does something like this, right, it's going to be a 3 on the day. And so what you won't find is you won't find those kind of like micro pullbacks, retracements, and bounces. You won't find those on the larger time frames. That's why we're typically actually looking on the smaller time frames. So hopefully, so I'll go through this. I think yesterday and today are probably both two really good situations that will show that. Let me see. Does anybody have anything they want to add? I'm going to check on how to determine to enter this chart, right? Where do you got it? Mondays at open. Yeah. Mondays at noon. Oh, you guys are helping out. Appreciate that. I see 232. All right. In previous slides, you noted that if you see a scenario 1 for the second, this is bearish towards the downtrend. You noted that if you see a scenario 1 for the second, oh, it means that your initial, if you've taken a trade off of whatever scenario, and then all of a sudden an inside candle comes up, it does not mean that you have to close the trade, to be fair. What it means is you're either going to get a continuation or you're about to get a reversal. So when you get an inside bar while you're inside a current trade, that's when your warning signs, your little flashers inside your head should be firing, right? At that point, you got to be like, okay, hang on, something could be happening. Either I'm juiced because I'm thinking I'm going to get a continuation, or it's about to reverse on me. But you need to have that same, like this reversal broadening formation scenario has to be in your head so that you're ready to flip on a trade if it does break one of those candles high or low. So that's what I mean. Hopefully, yeah, we'll do live. Time frames notice on a 15-minute, you'll see 3 to 5 change. 3 to 5 change often, and that was throwing me off. 3 to 5. Not sure what you mean by that. Oh, continuity. Oh yeah, so remember, we're going to here, and goodness, what is up with this animation stuff? I don't know. So these things matter where, right? So what the first thing I want you guys to understand is that you can look for, and you know what? You can look for actionable signals on the smaller time frames. And that's going to be for continuations or reversals. Inside bars, continuity, and all that kind of stuff. It's really these three. So we're not going to look at hourly for, like, you can, it depends on your time frame, but realistically, when it comes down to time frame continuity, these are your three main ones: monthly, daily, week. That's it. So if you want to look at year and quarter, that's fine. But an hourly, being green on the hour, what does that mean? It means absolute crap, really. It's not a trend. Being green on a 15 is even more crap, right? So in terms of time frame continuity, we don't really want to be using anything less than monthly, weekly, daily. You can, and that's just confirmation that how strong your trend is. And when you start seeing more red than green or more green than red, that should tell you where the trend could be changing. But it's about how many of these if you add yearly, are all the same color. So like if you have, well, my voice just came back. 3 green, it's green on the month, green on the week, green on the day, but it's red on the hour and the 15. What should that tell you? That actually tells you you're more likely to bounce on the larger time frames. So, but that's why these 3 are the main ones that you want to be watching all the time. But keep this broadening formations in mind, where if you do break that kind of halfway, like if it's, we've gone, the week is red, but you're close to where the week started, you need to know that you could quickly become one of these like pivot machine gun scenarios and completely flip on whatever continuity that you were looking at. So I feel like we need to get into some charts, man. Do I really want to go in here? Let me just see. So I think I'm good. Do you guys want to go into charts, or do you want to go into the indicator? I'll give you the option. Tell me in chat. I will go over NVIDIA. Nobody? Ready? Set? Okay. You know what? We're going to do both. Let me get me out of this PowerPoint shenanigans. All right. So I need to pull up where's a chart? All right. So sorry. So here's like my first like view of every week, and this looks like it looks a little mushy, if that makes sense. But right now I use a 30-minute to start my week, and you guys would know this actually if you were on the weekly trade plans and stuff. But I'm going to use a 30-minute with like a wider view, something like this. So 30-minute, how many is this? And I'm looking at probably about a month worth of time using a 30-minute candle to find my major levels. I'm going to take this off, and any of these, like just get clean. Off, indicator, blah, blah, blah. So the indicator that we're going to use today, right, is this. It's called Strat Teach V2. So I can give you the one in, I think we gave this to you already. This stuff there's so many, like if you're going to go into indicators, you can type in the strat. There's something called the strat helper. There's something called strat highs and lows, strat teach. These are all good full-time continuity. The only difference, so these are 3 separate indicators. The strat teach second version, Nagami made it. He's actually, I think he's in the server. It actually has all of these together inside of one indicator. So that's the one I'm going to use if you wanted to do, if yours only has 1 or 2 of these functions, that's fine. So like the strat helper, just so you know what it is, like this is the strat helper, and all it is, it's your candle numbers. So see how all these numbers kind of popped up, and it's giving you continuations and remember those sequences, right? RS, right? Rev strat, right? Reversal, 2 1 2, right? 2 1 2 down. That's what these things will tell you, and they'll color your bars. I think if I've had it set up before, they'll tell you, I want to color inside bars, maybe outside bars. That's that one. I don't use that, but it works, right? And I've used this strat, previous candle highs and lows, a lot. This is actually the one I used to use like all the time, and that's going to give you, the biggest thing is your multiple time frame support resistance levels. So remember, we're talking about candles like in terms of the daily candle, the weekly candle, and the monthly candle. So that's you guys all want charts. Charts, both indicator. I'm already here. So what's important is that you have something that's essentially going to show for you on your screen the time frame one. Like 3 hour is what I use. That's not as important as the next ones. You absolutely have to have something on the daily time frame. Remember, weekly and monthly. These are like your non-negotiables. So what are these? I don't know. I'll take this off for a second. Oh, I think I have 2. indicators. That's fine. So I want daily, I want monthly. See how that popped up? Weekly changes and daily. So, however, doesn't matter your color. So I want to always see, and I'm going to take off this 3 hour. Time frame 1 was the 3 hour. I'm going to remove, or purple was the 3 hour. I'm going to remove that, right? So right now we're just showing you the 1 day, 1 week, and 1 month. And what does this mean? Okay. So if you look at it, if white was the 1 month, yellow was the 1 week, right? Yellow time frame 3 is the 1 week, and what is this? Blue is the 1 day. This is just telling me, I'll do it this way, that blue, okay, it's a 1 day. It's just telling me yesterday's high and yesterday's low. You see that? That's all it's telling me. It's super important though. So watch that. If I just do 2, right? 2 is orange. That's number 3. So that's going to be the prior week's high and the prior week's low. Prior week's high, prior week's low. If I change this to a weekly candlestick, all it's doing is just outlining the prior week high and the prior week low. Super critical. Must understand. And then I can go to the 4th time frame, which is the monthly candle, right? And all that's telling me is the prior month's high and the prior month's low. If I switch this to a month, right? Look at that. The high of the month and the low month. But you always have to have all of these time frames on your charts. And those are going to be the ones that we actually trade off of. So the one I'm going to use, it's going to call TheStrat Teach V2. Cool. You guys following? And then this is just the default. So default, it's got all these shenanigans on here. We're going to really take out all the noise. It has this cool little box down here. I'm just going to double click the box. You could click the gear setting here. Hopefully you guys understand how to do it in TradingView. I'm just adding it raw, but there's a million settings, right? So first things first is the strat numbers. So I don't want the 2s on my chart. So I'm going to uncheck the 2s, right? This is the color. Like what color do you want your 1 or your 3 bar to be? It doesn't matter. And that's in terms of identifying the number above the candle. If you want to have that, that's great. If you don't want to have the bar numbers at all, just uncheck this and these numbers will actually go away. See that? If you want the bars themselves colored, but you don't want the numbers, you can click this, check that, color the bars, and the bars will actually, see that? Now they're colored. Maybe I want blue for my 3s. Okay, cool. Do I want targets? No, I don't want that. What you can do is if you use a VWAP, you can actually check this box right here and a VWAP pops up. It's just your regular VWAP if you wanted to. That works. So this is like multiple indicators all in one. So we'll throw a VWAP on there if you'd like. Actually, we're not going to because I'm not part of that. Here's this section right here. What about EMA? If it has, oh yeah, you can. EMA 1, EMA 2. I don't use that. But if you wanted to, by all means, what is, I think this is actually now what's the typical EMA setup, Stephen? It would be close, EMA 9 and.
I use a 9 and a 50, but the 21 is also popular.
Yeah. The thing with these things, guys, is that you just want to kind of use what the majority of traders use because they're self-fulfilling prophecies. That's what this stuff is about. They're great, but they're great for distracting you when you're in a trade. I'll be straight up with you, right? Like they're not something that I'm going to tell you to take a trade off of. Some people do great with it. I'm exactly like their noise and they show you the trend. The VWAP is the one that I would say is good to have personally. This is my experience, right? I'm not saying any one way is right or wrong. I'm just here to show you guys how I trade this system. So I'll leave it there. In terms of the rest, so here, this section, higher time frame levels, remember, that's super important. It's great that this has our full or time frame continuity box down here. I love this. It's very clean. It's nice and pretty, blah, blah, blah. But remember, I need it on our charts, right? And so this, I will use, you know what? I'm not going to use this. We're going to go focus on the daily level, the weekly level, and the monthly level. This has so many settings that you can do all kinds of other stuff. Is this really differentiating? I think I want a little, what are my colors? I think I do the month purple, I do the week orange, and I do the day. I think I do it white-ish. Yeah. And I have it set to previous, not current. So I don't care about current. I want these looking in the back. If there's the patterns, right? So the patterns come from what was called that combo sheet. If you want that on your chart, you can just click this and look at, they're all here. These are, what I would call this is that these are, when you're looking at indicators and any of these kind of things, they're crutches, right? I'll tell you about ATR in a second. They're a crutch, right? Like they're just to help you. Well, the purpose of this stuff is not to use a crutch. Does that make sense? Because if you're relying on something like this, what if somebody puts the calculation wrong, right? Or like, what if something just doesn't? You want to be able to adjust yourself on the fly, right? You don't want to rely on some indicator telling you what's going to happen, because what the frick? Like an indicator is never going to be as good as a human being, right? Like you guys can anticipate things, right? The indicator is going to tell you what is either happening right now or what has happened, right? Like that's it. And this is, to be fair, it's not really an indicator. It's just telling you what has happened. So again, you don't want to rely on those 2 3 2s, whatever setups. You want to know what they are and understand what they look like and how to identify them. So if I'm highlighting the 3 candles and the 1 candles, that's going to be the biggest number one. What is bear 6.1? Yeah, I'll get to all that. So, I'm going to take VWAP off because we're just talking about price action. So price action specifically means that we're only looking at candlesticks. We're not looking at anything else. So any of the other stuff is not there. And again, these are all just different types of setups, and I have these unchecked. If you want to check those enable target lookbacks, that's how many candles backward that it's going to label these setups. So I don't know if you saw, like when I checked this, it didn't show everything, and there's a lot of calculations going on this indicator. So it only goes back to here. If you change this look back, right, like that'll, oh, sorry, that's for targets. That'll just change how far back it's calculating those things for you. So this little box right here at the bottom, info panel, that's this, right? For me personally, I like it out of the way, and I know there was a way. Actual info panel. Alignment. I think I put it bottom left, so it goes over here out of my way. You can put it wherever you want, right? And you can size it. I think I don't know if I have. I think I have auto. And so so Bright is asking, what is ATR, right? I'm going to tell you not to use that. So, but what it means, it's called average true range. It is very important to understand a stock's average true range. But if you go back into some of our webinars, we actually show you something called ADR, which is this average daily range. And this we use in combination with the strat. I might as well show it to you. And this will tell you, all right, fine. I'll give it to you. ADR, right? Go into indicators, type ADR, literally called ADR. This guy, Trey Peng, is the creator. I'm gonna delete this. I'll put it on ADR. We click this here and it shows up. I'm gonna hit the settings button, and then the default length is 5. We wanna be looking at 14. So ADR means average daily range. And that tells you to the upside how much will something on average go up, and on the downside how much will something on average go down. The average number is super important. So the average is calculated by this thing called the length, and we want to use a 14 average, which means 14 days. I have this checked, this show today only box. So I'm only looking at today. This, I don't really think it matters. And, if I don't need it. If I'm looking at a daily, weekly, or monthly chart, I don't need to know what the average daily range is because that doesn't qualify. So can you please show us settings for ADR? Yeah, there you go. So why is ADR important? Check this out. So this is the cues and this is the ADR, right? If I go a replay, it doesn't matter what time of the day that I started, right? It's actually going to tell me, look at that, right? It's going to tell me out of the gate where my average daily range from the open would have been, right? This is pre-market average daily range. If I play this forward, okay, so this is the first 30 minutes of trading, first hour. I already have this. It's going. I think as it's moving, this stuff, when things move like that, that's when you know volatility is actually changing. Did it press through? Oh, that was the whole day. So yeah, that was accurate. I could do this. Let's do it on a 3. Just for you guys. All right, so 3, the day opens, right? I got to get this stuff off here in a second. But the day opens and you're using average daily ranges. So it's establishing itself out of the gate. Why is morning volatility all wild? Because it's the range is establishing itself. And so as the day goes on, these basically stay pretty consistently flat, right? I mean, as it's moving, that actually should tell you that volatility is increasing, but it's only moved, right? 313 to 3, like barely. But it's telling it's not gonna go above that, right? Like, and if it does, you're going to have a massive spike in volatility. Does that make sense? And so now tomorrow, this new range, see how it started this wide? Like the range pre-market started here. But after today's move, that whole range actually had to adjust. Just this ever so slightest. See that? Slightly different. So we're using a 14-day average. This little slight adjustment means that your option contracts, guys, they just popped in price. So everything just got a little bit more expensive because the average range, remember, options are priced based on the probability of something like being expiring in the money or at the money, sorry. And so now that the average range is getting bigger, the probability becomes more. So where the hell, I need to get these stupid display hammer shooter label, right? I don't want that. So this takes these H as hammer, S as shooter, or H, yeah, whatever. So I don't need that. So I'm taking that off. What happened here? Taking everything else off and taking 80 off. We're just going over strat today. So I'm looking at a 3-minute chart, right? Like, why would I look at a 3-minute chart? This is yesterday. And so here's the day before, and this is the cues, right? So we said we're going to look at some live charts, and I'll just use this replay function for now. I think most people will sit on a 5. Is that accurate? I use ATR. Yeah, I mean, ATR. So what you should know is that ATR and ADR are the same thing. Like if I click this ATR and it's they both have the same calculation, you need to know well, it's not in there. So I don't know what this is calculating the average true range for, well, what that metric is, but it matters, you know, to define how wide that range is going to be. ATR, there's another one, like ATR, average true range, natural range, all of that, will typically display on your chart as a little box off to the side. The ADR specifically, I just need it visibly in my face, right? And that displays it a lot better for me. So if you're taking directional trades intraday, how do you define, like, you can define your targets with the strat, but an average daily range, dude, like that's just very crystal clear. Well, that is the average range of that day, and that should be on the high end or the low end as far as you should be expecting something to go, not farther, right? And once you hit that range, just know you're basically at your average target. Anything further is kind of just icing on the cake, but on average, you shouldn't expect it to go more than that. So I'm gonna move like this. So inputs, I don't need, you can keep the hour. I don't use the 4 hour, and I don't typically use the quarter. You can keep the quarter, keep the quarter. You know what? Let's keep the year. So if you want 1 hour, daily, weekly, monthly, all this is telling you is if it's green on the day, red on the week, month, or the year. That's it, right? Actionable, yes, no. Take it off. You can keep it there, and it'll just tell you if you have like one of those strat combo sheets. But for now, it's just easier to keep you less distracted. This is your time frame continuity, all nice and pretty, sitting right there. Does that help? Hourly, daily, weekly, monthly. What's most important and what we're going to use to trade off of are these levels here that this is displaying, right? So can I find like all these strat setups, in the middle of the day? Yeah, you bet your behind I can, right? So where is so here's a one, right? Here's a one. So my ones are what color? Yellow, and my threes are blue. So do these setups exist, throughout, the day, every day? Yeah, they do. I just changed from hollow candles to regular candles so you guys can see a little bit better. And so yeah, like what is the strat basically saying? So the strat says that you want to look at the previous candle, and really just kind of define every time you want to look at the previous candle and really just mark the high and the low of the previous candle. And as you go, God, I can barely see this. Let's just make this here. Right. And as you go, like, okay, if I'm on a 5 minute, what is this? I got all kinds of stuff here. Sorry. If I'm on a 5 minute, right, I have to be looking at a 5 minute chart. And the strat's just telling you, okay, well, here's my candle. My trigger here to go long would be the break of that candle. This candle here now becomes my stop. Does that make sense? Or the end. And in the strat, you use the wicks, use the entire candle. Like we don't differentiate necessarily the body from the wick, if that makes sense. You can, that's a personal preference, but if it traded to the wick, then it traded there. So from here to here, if this breaks, my first target is this wick right here. That's what the strat basically tells you. Once you've hit that, then your next target becomes the top of the very prior one, and your stop loss becomes right there. So that's how the strat works. It's every single time now that you're here, okay, so you hit this target, great, right? This becomes your next target, right? And your trigger is as long as it's staying above there, and your stop really becomes this. Does this make sense? And so it's just giving you, and your big target here is right here, and your stop, let's take this one down. Your stop would really become there. So let's make this one a target here. And I need, what else do I need? I need a trigger, right? So as long as it's continuing, so white's going to be my trigger, green's going to be my target, and red would be my stop. Does everybody see how that went through like in succession? And that's on a 5 minute trade, right? So the question now becomes, am I taking a trade based on a 5 minute chart where my target, what is this? That's your target, right? Like that is, I don't know. Yeah, I can barely see that. That is like 36 cents. Well, that's what the strat is telling you your target is. So it's your job to know whether or not that's tradable, right? That would be a very difficult one to trade. So do I want to take an actionable signal based on a 5 minute chart? Probably not. Is it accurate? Well, yeah, it really is. So that's where the kind of like toss up comes. Well, yes, it's accurate, right? You just saw it was accurate. And if your stops keep moving up, once you run out of targets here, by the way, you need to find the last time it was at this level. So I can't find, not looking at a 5, I must zoom out. right? So, okay, I'm zoomed out, right? You see where these are going? Now this becomes my next level right here, that candle. And this stop, whatever it was, that's my stop. So target, next target, and then this is the trigger. Do you guys see how this is working? If that goes up, all right, so target, trigger, stop. And it's just going based off candle to candle, tip to tip, bottom to bottom, whatever it is. See how this starts to work, right? How these like magically line up and happen to become resistance anyways. It that's how you want to play it. But do you want to take the trade on the 5 minute? No. So here's what you do. I'm going to delete these lines. And if we want to like kind of filter out your noise, right? So we've got 3 lines that are going to be constantly moving around on our chart, right? So if you're using this indicator, right? These lines, by the way, and I'm just going back in time, these lines, as you play them forward, see they start, right? I'm playing forward. The lines themselves will actually, well, let's go to hour, just so it moves a little faster. The lines themselves will actually move for you. So you don't have to go back and draw your lines over and over. I will say it's good practice that you do, but it's not required. The ones that are going to be static are the monthly and the weekly candles, right? So if this is a whole week right here, well, look how it's bouncing around, right? And so what I'm going to show you is like what are like that week. Oh God, but the month hasn't stayed the same. So what's a good trade to take with options, whether it's a swing or something else? What I tell you is not to look at your 5 minute charts in terms of defining your levels that are going to be good to trade, but use these specific levels as the levels that you want to trade off of. When I was learning how to trade in the beginning, it was a 2 to 3 candlestick setup at critical levels, right? And I want to use some other things that will help me understand momentum, right? So if this is a weekly level, right? Whatever it is, as time goes on, let's see, was that a weekly level earlier? It probably was. So I'm gonna play this forward. So the monthly levels here and here are gonna be the biggest levels to trade off of. The monthly like high and low are going to hold the most weight for your chart. So what I mean by that is they're going to actually provide the most momentum. And so if we're option traders, we know we need momentum to really get paid. That's going to be the biggest thing. So where's the most momentum going to come from? It's off of those monthly highs and lows. The second strongest momentum that you're going to find is off of the weekly highs and lows. And the third off of the daily highs and lows. So that's why we're only going to trade off of those levels. And you can trade whatever you want, but try to take trades on those levels. Even if you're day trading, and even if you're just day trading SPY, if you're day trading SPY, let's say, or the Qs off of a daily, weekly, monthly level, you're going to have plenty of trades to go in any direction, right? And so at this point here, this, whatever day this is, April 6th, we're live. It's broken below the prior week level. Now remember the prior, and it already rejected off the month, which also happens to be the prior week high, right? So this, remember, this level is giving us a lot of momentum. It's broken down below the first time. Okay, it bounced here. We should expect a bounce, but we should only expect a bounce up to that prior week. Does that make sense? You guys following so far? I'm going to take the day off here just so it's less confusing for right now. That could never work with Forex. Yeah, well, it might. I will tell you, actually, it could and it does, because we have, Jesse's not in here, but we have traders that actually have EAs like that are specifically using this. But anyways, and it's, however many pairs you want. So if you're looking on this, right? So do I want to take the highest quality setups? So off of the week, month, that's going to give you the momentum. Remember, in terms of options are convex pairs. They do not pay out linearly like Forex or futures. That's completely different. You cannot make a lot of money off a very small move in options. It just doesn't work. That's not how they work. So off of this high, right? Like that's a good trade to take. And if it was something like that, right, inside, what are we looking? We're looking for that 2 to 3 kind of candle setup. Unfortunately, this one, it happened after hours. So as an option trader, you would not be able to do that. So I'm going to take the after hours off. Oh, great. I just lost all that. So here's that same time. One indicator. All right. So it's tagging monthly high from here, right? And I'm looking for that kind of, where is it? That combo sheet is what I want to have in mind. I'm looking for these kind of entries, right? Any one of these setups. So 212, 312, 22, whatever. What you should know about these is that every single one of these starts just very clearly with a clean break of the prior candle's high or low, right? None of this tells you what direction happens until one of these sides of these candles breaks to the upside or to the downside. So you're always just watching those candles. And the real candle you want to be watching is that daily candle, which is why we're going to be using really just that daily, the daily, weekly, and the monthly. So if it breaks off of a daily, that makes sense. Breaks off of a daily and goes into, God, what is this? It goes off of a daily. I want to actually trade to the weekly or to the monthly, very next level, right? So if this is my trade, I'm looking, I got a 3 and I got a 1, right? And I need to find my triggers. So what is this little arrow here? No, take that down. So do I want to get caught up in this noise? This is a 1 hour chart right now. It doesn't really matter. The biggest level that I'm trading off of is monthly, right? So do I want to get caught up in something this small? No, not necessarily. I'm looking for a bigger move for an option, and I'm going to be looking for something that's going to be a setup here. And I know that this is likely, if it's below this purple line, it's likely going to come down. If it's above the purple line, it's likely going to go up. I'm going to be looking for something like that, or I'm going to be looking for some kind of rejection. Does that make sense? Hopefully you guys are following me. So I start to get a setup. So I get a yellow, yellow. If I'm going to take this long here, I have to know in my head, well, look, do I want to take that long when I have this monthly level that's right in front of me? I mean, maybe, but I have to know that that's going to be not as good of an odds trade. If I'm looking here, I got red, red, red on the year, the week and the month. Okay, they're starting to go, but I'm still red on the day. And I'm kind of in that flip situation where I have 3 out of 5 that are red. So it's still telling me, maybe not quite time yet. So we'll watch that. Let me move this up somewhere. Where can I put this? Top right. That should work. Okay, cool. So it's up there. So I'm still looking for that 2 to 3 candle setup. I'm ideally looking for these yellow candles, right? So now I have a new yellow candle here. And I want to take something. All right. Took me forever to get that. On the break, right? And so if I took this up, I got to know also that my target is going to be just to the top of that, right? So it's not something I necessarily really want to take, and it's below that monthly pivot. So you don't want to go long. Oops, that was way too fast. Here, so we'll zoom in to a 5, and this would be realistically, maybe you're on a 5. All right, Roddy, you can go to the server, talk to the Forex guys, not me. But so you're breaking up, right? And this is where people get kind of chopped up. Remember, one of you guys had a question of if it's an inside candle, if I'm getting a lot of those, I need to be kind of careful, right? So here's an inside candle right here. If I went long, let's say you saw this and you're like, oh, I'm gonna get this long because this was the open. It's a big gap up. And you should see here that, oh, if you didn't have this line, it tagged a monthly level, your monthly high, it's immediately getting rejected. So it's still going to be pretty tough. I got 3 out of 5 red here. It's not, potentially switching, but not quite. Could I take this trade on a 5 up to here? Yeah, you probably could. That's like 2, 3. That would be, you'd make money on that, right? So can you take this here? Yes, but once you get through these kind of levels, just know, hey, look, it's going to be a little bit tough. But here's how you want to like monitor the trade, right? If you're constantly watching your candles, and I remember we're saying we're constantly looking for that very next setup. So here's the next yellow bar, right? This I would actually become like my give or take stop, right? Actually, realistically, my stop would be there as my trigger sits. So if this triggered, right, my initial stop is going to be that very next low right here. And I'm going to have a target where? So my targets are going to be here. Is that enough? No, I would really need a target up here. So here, and I also know that, hey, I have this monthly line, right? That's on my chart. So that's going to be really like my ultimate target. And that position, that's tradable for sure. And it looks kind of like this, right? From that perspective. So would your target have gotten hit there? Yeah, sure. And then as it's going, you're just kind of monitoring. So here's a pivot. I don't have to close it yet. As my targets hit, let's say that's close enough, right? I'm moving my stop up to this. This would be my stop. And, my next target would be here. Does that make sense? Did I hit it, right? Yes. And you're just constantly moving your thing. As this goes, maybe I had my target up here, right? You have your next trigger, you need to have, let's say your target's up here. Your next trigger becomes, I don't know, something like this. Your stop just needs to constantly move up. If this was your stop here, the second that kind of gap down, you should be out of the trade. So did you make money? Yeah, you probably made money, but now you're really in a new trade. And this is the ones that you can scalp. This is a scalp, but the ones that will give you the most momentum are off of this kind of level here. It pressed, that's great. But having 3 out of 5 red, I want to be trading kind of with the trend down. It's struggling to continue through that monthly pivot. So just moving forward, this is your setup, right? On the 5, it's super hard, but remember, we want to really look at a 15. So if you're looking for those setups, 15-minute is the one that you'd ideally want to be looking at. And really, it's right here, right? So this becomes if I'm going to trade short, I see this rejection. I have a lower high, lower high, lower high, low, lower low, and I'm starting to see it kind of come down. And I know that if it hits this level and rejects, because this is a monthly, it's going to have a ton of like velocity. So really, I'm just, if this is my trigger, let's say from here, this prior yellow bar, here it is, right? So I'm going to take this red here. I'm going to, and really my first target is right here. So this right here is what I would trade something like that on an options position. And it's off of these, in the time frame continuity, right? Off of these kind of levels. And I might have your first target. This would be a trim target for me. But because I know that I have another level, a key level right here, I'm going to trade from that monthly to that weekly level, just to the very next key critical level, if that makes sense. I'm going to put the daily on real quick and show you guys kind of how that lines up. All right. Yeah. So that's daily low. So was that there then? I don't know. Probably not. Here's a question. The pivot line is extra confirmation to enter or not. No, I wanna trade off of those lines. Those pivot lines are the key levels that I want to use to trade, to make my trades. And I'm going to trade from either a monthly down to the weekly, or from the next trade is going to be, if this is my prior day high low, these, I'm going to make this a different color, right? What color are you guys? Tell me. We'll make it yellow. Those yellow pivots, I'm going to now it's from here down to here. So my trade, if this makes sense, I'm looking for that same exact setup. I'm just taking the same thing. And so I'm going to take this top pivot as this, we call this a swing high, but this up here, that's my stop, right? And so my trigger is below this low. I have not been stopped out yet. Let's say if it wasn't quite there yet, this was probably your stop right there, realistically. And you're just going to be continuously looking for that next setup, right? And so my next, and now we've already established that, okay, so this weekly pivot is going to be my next target. So I'm still in the trade. What I'm not is I'm not stopped out, and it's continuing to press. I see these things flashing too, but um, I'm gonna get this kind of momentum mostly off of a monthly level heading towards a weekly level. Look at that, that's a flusher, right? So like in a day trade from here to here, these are big moves, and that's really what you need. The 3% move, 11 points on the keys. That's what you need to make like like really good. That's what you want to see to make good money, because options, the bigger the move, the bigger the payout. Futures, um, futures are different. Futures and forex, the equivalent the move, the equivalent the payout. It does not work like that in options. It's called long position or short position. It's in the far left. Oh, I think you're helping somebody out. Appreciate that, man. I gotta check out. Can you please show us NVIDIA? Yes, I'll get to NVIDIA. Was actionable shown in the box. Yeah, I mean, if you want to do so, let's look at the box. I actually don't use the box, but yeah. So right now, this is saying no. This is exactly why I would tell you I'm not going to use the actionable, because look at that trade. If that thing didn't tell you it was actionable, I don't know what to say. What's important is that the levels that you use to trade off of, that's what's important, and understanding where the trend is. Oh, look, this was trying to move, didn't make it. That's what's important. Like these look, okay, so this is saying 222 reversal down. That's what that was saying. Yeah, 322 reversal. It's just giving you, moment to moment. Oh, that's pretty cool. But no, if I'm watching this box, like it's going to be really hard for me to monitor my position and any potential profit or loss that I have at the same time if I'm watching some box on my chart rather than my my chart itself and the P&L. It's tough, right? It's tough enough trying to send alerts through the alerts. Oh crap, I'm going really far, really long. What I wanted to do today, guys, is to show you, hey, look, these are the key levels. So monthly, daily, weekly. I'm trading from one level to the next, right? And so see how it got pretty much there. What I do want you guys to see, if this was your trade, right? And as you were moving, you kept moving your stops. So this level, which was your trigger level, that becomes your stop. That's a hard stop. You better be out of that position. But realistically, as you kept moving down, because we had this trigger level, right? This right here should have been your stop. And so you should have been realistically stopped there. And as you're going, right? Like, you could have had this trigger. It's a no trigger at that point. I think realistically, yeah, your stop, if you were using like a trailing stop logic, would have been at least here. But that's not the primary way you want to do it. You're looking for, remember when we were saying, hey, every time we see this yellow bar, we need to be thinking, oh, a reversal could be happening, right? Because it's true. A reversal could be happening. So how would you know that a reversal is happening if you're not constantly monitoring what we call market structure? And that's what we're going to go over next week. We're going to have somebody come in. We're going to go over something called Wyckoff or Weekoff. I forgot. I don't know how to explain it, but or to pronounce it. But it's essentially how to pick the right stocks in the right environments, and it's understanding these kind of consolidation zones and when they happen, what might be about to happen, or how long something's going to stay into that consolidation. That's what we're going to go over next week. But for now, you're looking, hey, look, this red, okay, was that a stop? No, not necessarily. Like yellow inside bar, warning, Will Robinson, right? So I have, now it's coming down, I have these 2-2, and I'm constantly thinking, what you need to be thinking about is what would trigger a trade in the opposite direction. So if I was trying to trade the opposite way, right? Because I'm constantly, if I'm in a trade one direction, I'm just looking for that quote unquote trigger that's set up to constantly repeat itself. If it doesn't repeat itself, then I need to be questioning my position. And once it reverses, and how am I going to do that? I'm looking for what a reversal um, trigger would look like. And so what a reversal trigger could look like, if I was trading the strat, now I have all of these levels here that might get in my way, constantly looking, right? So I haven't talked a lot, and I know that this is a lot still. I feel bad because there's so much to go through, but I want you guys to understand some of this stuff. I'm looking for that kind of, so as this is playing out right here, right? So if this is my high, and this is what we're going to teach you next week, understanding what's market structure, high, low, that kind of stuff. This is the prior high. This is the prior low. At this point, when you're in a granular situation, this right here, you should know, and especially right here, because of this weekly pivot, see that? That if it gets above this, it should be going back up. Does that make sense? And this should be your stop. You could give it a little breathing room up to here, because this is what? Yellow was the daily high and low. So if it reclaims the daily prior days, like, range, at that point, for sure, it's going up, right? Would anybody disagree? It's at least going up to where it's at least going up to here. Do I want to be in this trade? Probably not. If it gets to here, then it's at least going to here, definitely going to here, and so on and so forth, right? But realistically, most technical people would say it's probably going to come back to here. Do I want to give up half my profits? Probably not. So at this point, me personally, what you guys will see is like I might be looking for the next market structure move, which would be a higher low, and I would ideally be exiting on a higher low, ideally, if I can get out, if I can get that. But if it continues above this, I'm absolutely out, right? So let's see what it gives. I have no idea. Okay, so it came down. Cool. So I'm still in it. Still in it. Ooh, that's very wiki. Okay, boom. So that's a higher low. This is where I'm get the F out, right? That's probably the close of the day. So yeah, because then new candles, right? It was a higher low on the day. I'm getting out. Does that make sense? Um, so I'm exiting on. So we're gonna go over next week what's called market structure, right? Yeah, and I'm gonna say this now, and you guys are gonna think I've said this to friends before that trade, and they're like, "Dude, what? It's not how it works." We enter short on lower highs, and we exit short on higher lows. What does that mean? We enter short on lower highs, and we exit short on higher lows. I want you to understand that. I'm just going to say we enter short on lower highs, lower high, usually not the first lower high, usually the second lower high. We enter short, and we exit on higher lows, right? So if this is a higher low, you see how the lows, like you would not have been out on any of these higher lows until this. And so this understanding that, right, versus what most people would do. So this is going to give you this kind of, I don't know how long, what that pay range is, but what I'm going to tell you is that understanding that is actually the difference between like a 50% trade and a 100% trade, right? Because there's this short, or what do most people do? Most people would wait for the break of the low here, right? And maybe if they're good, they're going to get a retest. And then they would also wait for the break of the high here. They would be entering here and they would be exiting here. This is ours, right? And this is everyone else's. Do you see the difference? You're almost double the P&L, and you literally are double. So we're going to teach you this. This is how we get those returns, right? And that's going to make a huge difference in your trading. We're going to use the strat in terms of the levels that we're going to take. We're going to take trades off of. So off of prior week highs, prior week and month. See, when I have a week and a month lined up together, that's a very strong level, right? We're going to move forward and just show you guys one other thing. I'm just going to zoom, and I will look at NVIDIA. Is there a day? Type in chat if there's a day of NVIDIA that you want to look at, just so I have it and I can just zoom straight into it. Tesla. All right. Well, so I'm going to move forward. There are a couple, two things. I'll look at a couple. I'm going to do NVIDIA and we'll do Tesla. That's it. And then I want to do, right before that, I want to do these broadening ranges for you guys. So you know what? Forget it. Let me get forward. Sorry, I know we're late. Day. So yellow is day. And what day was it? Just go to a daily chart. Okay, so I'm going to zoom in to this because this would have chopped a lot of people if you're thinking the strat, right? Well, maybe it did, maybe it didn't. I don't know, but it's a 3, and the 3s are like the harder ones to trade. So while my trading view and internet freezes, I'm gonna take a sip of water. Play this forward, see if I can find it. Okay, so it's very little situation. So I got to turn my extended hours back on so I can differentiate. I think it's this day. So these are the last 3 days. So the last 3 days, almost this week, right? So what's important? So if this day, this is the 31st. What day is the 31st? That's Tuesday. Yeah. So this is the first day of our trading week this week. If you have this indicator on, you already have the prior week levels. And I know that I'm running up into this purple prior month level. This happens to be last month's low. So I'm looking at time frame continuity. 3 out of 5 is red. I'm actually thinking short, right? Like I'm thinking that this is a dead cat kind of bounce. But I need to understand that I've actually broken above last week's high. And so at this point, if I have these levels here, I'm thinking in terms of weekly candles. So if this is a week of a candle, right? This next week candle in your mind, you are thinking that, oh crap, that's what this week's candle might look like. Very realistic. Look, watch, we'll do this. Who says 332 at the end of the week? Anyways, so both of these levels are like major momentum levels. Unfortunately, this guy is now trapped right in beside these 2 levels. This is when I put on something like a neutral trade, when you're trapped inside of 2 major levels. And you know, I had a lot of condors on at that point in time. It'll stay in here for a day or 2, typically, but this one, it's got a lot of momentum happening behind it. At this point, let's see, where's the day? So we have the daily high of yesterday is this yellow line, and that's also the week high. So I have both the prior day, prior week high lining up just smack dab on top of each other. I have the prior month low right in front of me. So while these 2 lines together should provide some momentum, I know that the strongest like wall that it needs to get through is right here, and that's going to be kind of tough, right? If this was a weekly, monthly, and it was above, oh, I'd be like full, like it's going higher, right? I'm getting these 3 candles. What you want to know when you get a 3 candle, it's not super directional. It's more like a chop is going to happen. So when you start seeing these large outside bars, what I think of is that it's going to be choppy, right? So that's what I want to leave you with, at least on that for sure. But you're just looking for these very next setups. I think this day, right? So if a 3 right now, so this is trying to be what? So that day was trying to be a 2. It was trying to be a 2. So the day is over. So it opened at the prior day's high and it's getting rejected. So I'm thinking, you should be thinking, okay, well, if this day was a 2, this day is starting out to look like a 1. So do I want to trade a 1? No, I don't want to take a trade on a 1, right? I want to take a trade on the break of a one. So at this point, right, of the day, you're thinking that, okay, it's failing to break above yesterday's high. I have this weak level. This should be a one, right? And what would a one look like? It would look like inside of yesterday's entire trading range. So maybe, and usually you want to think in this about 50% of yesterday's range because the ones are typically smaller. So I'm thinking that this should turn out to be a one on the day. That's what you should be thinking of. If it breaks above this level, which it starts to wick, right? Then I'm thinking that it should try to become a two, but I know that I have this up here. So do I want to take that long? I don't want to take it long until it's above both of these lines. If it's above both of these, then I got a big juicy fat target where I get a big juicy fat target like way up here. But realistically, we're going to take about 50% of that and say 340. That makes sense. I'll show you that later. um, or we're going to take an average weeks range, right? Which is here. So realistically, actually, in actuality, right here, 330, 30, we do that on Monday. We actually give you those on Mondays. So it's not, that's what you want to be thinking of. So is that a tradable, is it tradable price action? No. Was it tradable? The trades would be from here, this level, up to here, right? 312, from 309 up to 312. That's your maximum upside trade. Downside, if it's a one, you're looking from 309 down to probably about like 306. Both tradable for sure, but that's what the strats to tell you on smaller time frames and thinking of the daily time frames, trading off these major levels. So day closes, very chop day. You could have taken both of those probably if you're only if you're ace, and he's just a beast, and he did it this day, and he did it on the spy. So how does it work, right? So we're about to open yesterday. Okay, boom. So I have yesterday's high, yesterday's low, right? I have the weekly pivot high, the weekly high here. Now it's opening clean above. That's really good. And it's breaking above yesterday's high. So where should this be going? Right? It's going up. There's no question that it's going up. And where can you trade to? Right? Maximum I could trade to here. If I'm using my average daily ranges, which we showed you guys, I don't know. It should probably tell you that right now it's telling you that your ADR was here, 319. That's what it would have told you right there. Um, so that's actually good. This would be like swing target, daily target, ADR. And your stop, if you enter your stop, where's your stop? Your stop is at this weekly pivot low. Does that make sense? You're entering on the break of yesterday, and this is your stop here. If it goes below your stop, this weekly low, you got to also know that where could it be going, right? So you have a potential short trade going down to here, which is yesterday's low, and that stop, if you took that trade, would be at this daily high. See how this creates these like nice clean pivots? So we'll play this forward. Okay, so you got wicked out pretty much right away. So you should have been stopped. Wow, that's pretty wild. So if you went long, that's 30 minutes of trade. You're probably out. I don't even trade the first 30 minutes, and that's typically why. But remember this over here? Let me stop this. So I'm taking that. So we already had established that this is a trade. You've completed that entire trade, but you got to be thinking this way. I went to 196, 196. I don't know what that is. Oh, NVIDIA. Okay. Uh-huh. Is that today you're talking to NVIDIA? I don't know. So, but anyways, so that was that whole day. Oh, okay, cool. We'll take a look. But so this becomes a three. So in the morning, I think I was in Shopify, and uh, you know, I wasn't looking at the cues per se. Oh my God, crypto is exploding right now. Look at you guys. Are we trading this? What the frick? Sorry. um, Yeah. Sorry, I'm a trader. So here's what you would have done. If a day starts out like this, right? If you're thinking of broadening formations and you're thinking in terms of the strat, as the day starts, let's say you're super thin, and if something starts to break above, this is your moment of like, ooh, I need to be thinking this. All right, well, this is a clean trigger to go long, right? It opens above, presses, you're going long, and your stop is really here, right? But if you didn't take that, or even if you did, that's fine. Your stop is here. So there's a big wick. At that point, you're thinking one of two things is going to happen, right? Either this is going to bounce back up, reject right here, and you can take this kabam down. And on this smaller time frame, that stop, your stop would be where your stop would be right there. That's a beautiful trade. And you're thinking in your head that it could be, it's at least going to be a failed 2 scenario, but it might be a 3 scenario. And so if it was a 3, and in my alerts, I think I was at Shopify, I was like, if you knew the strat, you were thinking this all day. If it's a failed 2, a 3 starts out as a failed 2. So this tried to go to become a 2, and it's failing. So either it becomes a 2 or it's completely failing, and I have my first target about halfway point between, of yesterday's range, which would make it a scenario 1 realistically, or almost a scenario 1. But it's very possible that it could become a scenario 3. So a scenario 3 would put my targets at the very low end and just outside of yesterday's low, because a 3 is an engulfing candle. So it breaks yesterday's low and yesterday's high. So this absolutely broke yesterday's high. And I know I have this weekly pivot in between. So this level will be what it will be creating momentum. If it breaks through, which it did with velocity here, I should expect that something like that kind of starts to happen. And so this is, again, if I wasn't in this trade, I'm going to be looking for this kind of trade, right? Something like that. And I'm going to be looking for the sequence for that structure to constantly repeat itself over and over and over. The second it doesn't, I know I need to be either flashing warning signs or looking for some kind of reversal. But if I know the strat, I know that it's very possible to break the high of yesterday and also break the low of yesterday at the same time. I know I have this weekly pivot here that creates this momentum. I have another blue bar, right? Yellow, like what looks like starting inside, and we're just going, right? At that point, if you had started your trade out here, that's great. Realistically, you probably would have been able to take it there. You're looking, is this continuing to the downside? Your stop would be where? Actually, watch this. It's either your stop, or if you miss this whole move, it's also your trigger. So I'm going to be looking for the trigger to completely, recycle itself over and over. I want to continuously see a series of lower highs and lower lows if I'm short, or higher highs and higher lows if I'm long. What does that look like? It looks like this. And if I have these key levels to trade around, I know I have a series of them that could create like pretty sustained moves, which is what I need for options. So if this is my, I know should be like supply resistance, whatever. Anybody that was long in here from the day before, this could be a flusher, right? Like if you just enter long and it's now going against you, you just like market close, get me out of here, and that could create like a big, strong sustained move to the downside. But for this daily target, I can, at this point, now I'm down, I'm 50%, right? Your stop, you're just moving your stop down to those prior pivots, right? Or I say pivots, prior structure highs and lows. So from here, I'm usually using 2, not necessarily the very next one. That's one of the bigger differences for me to most other traders. So at this point, it was here. We got a high here, high here. I'm looking at a 3, right? So how am I using? I'm looking at 3, and I'm really looking at market structure and thinking in terms of the strat setups. Is this a series of like lower highs and lower lows? Well, yeah, for sure. It totally is. At this point here, right? You hit yesterday's. And so I know, okay, well, if this was a 3, it's going to complete. Does a 3 typically become like this big giant flusher? Well, I mean, maybe, right? It could, it really could. And honestly, I think I was definitely in the situation where like anybody that took it long from this level might be getting stopped out. And so, anyways, there are other people that got, I think Ace was like, the dude just like amazing, right? Blew me away. But anyways, if he bounced off, he's taking these same levels daily, weekly, monthly pivots. I don't know if he knows that, or I don't know. He'll tell you when he's going to come on one of these later. But at this point, I'm like, okay, so if this is my stop, maybe I'm getting long. If I saw this break here, right? So this weekly level becomes this. I want to see this daily break for the next trigger, right? I'm wanting to see, actually, I'm wanting to see something like this, but I'm not getting it quite yet, right? To continue down. So could it go like this and then continue down? Yes. But my stop is here, right? At this point of the day, right there. And my stop is there. And if I get what? If I get a break like that, that would be a trigger long. So I have to know at this point, if I'm thinking of the strat, like this is potentially a place where I could add, I could still be adding because the setup is still technically there. It's not invalidated. Anyways, we'll see how it plays out. So I'm playing. All right, so it's coming down. Cool. Okay, so that is a higher low. I should be really worried. Okay, no, it's a lower low. Yeah, we're kind of getting this chop. So we're here. These are my stops. All right. So you could add, that's a good trade. I think I took that. And I think I missed that. I definitely missed this exit, which is what happened to me. Um, and I'm like, all right, well, here's your stop. Am I there? No, I mean, could I push it to here for sure? But if it goes any higher than this, right? Remember this line? Dun, dun, dun. It's definitively going above that. Am I there yet? No, not quite. Um, so what could I do? Oh, this is a toughie. But I could continue to keep my trade. That's definitely an even higher low. Should be an exit right there. And once we broke that higher high, okay, right there, I know, boom, that is a trigger long on this, amazingly great 3-minute chart, right? So higher low, bad sign, higher high, toughie, higher high and a higher low, I'm out, right? What would a trigger long be? It would be yet another what? Higher low. That's a trigger long right there. That lines up. I'm gonna be flipping my trade immediately. Boom, right there. And my target could be up to at least there. So anyways, that would be exactly a 3 on the day. Yeah. So there you have it. I think I flipped my stuff to credit spreads there. Can we take a break? Yeah. All right. So I just want you to, so what am I, you're thinking of if a continuation fails, reverse on it. That's it, right? So we want to look at NVIDIA. I'll do the last one. Yeah. So NVIDIA, same thing, right? So you have yesterday's daily high. We have the weekly pivot. Look at how beautiful this is. Even if you didn't miss this, you have the low bouncing up off the low. Cool. Could you trade up to that weekly pivot? For sure. And then you have this prior couple days of consolidation right above it, not able to break. But the second that you broke yesterday's high, oh, that's a fat trigger long. So if you were out at 196, that's great. Look at that. That's your upper average daily range. I don't see anything wrong with that. Yeah. So if you didn't catch this off the bottom here, that's fine. Your trigger would be right off this weekly pivot, right? After it's broken this daily, we know that the weekly is stronger than the daily. I'm looking for it to hold and press back up. And I have this average daily range for my upside target, which bing, bang, boom, whatever, right? Next target, frickin' 204, right? What is that? That's the prior month pivot. So there you go. Anyways, hopefully that helps, guys. I know it went way long. How could I have stayed to 196? I don't know why you got out. I don't know where you could have, like, you probably got out here, right? At this point, right? Because your average daily range, you don't necessarily need to stay to 196. I don't understand. He was out at 193. Where is 193? Oh, that's not a bad exit, right? Like the only way that you could have done that is like this right here, this level. So if you're using the strat, right, and you're thinking of in smaller time frames, we'll go back to 15. That was your, well, yeah. So you might have been a little tight, right? Remember I say to the second higher, the second pivot, right? So this was probably your stop here. The only way you could have done it if you were using not the very previous, but the one before that major pivot, right? That's the only way that I could see for that one. But you know, it's options, right? And you also know that look, you're at this average daily range. Those options are nasty expensive. So was it a bad bet? I didn't swing a call because I don't know, right? And I also, what I did know is that they were very expensive. So if it didn't continue, although now, you know, it's 2 days into the month. So yeah, the month is green. The month could quickly turn red, you guys, if we're below, if we ever at any point go below 182, you know, this month, that whole month, green month is going to flip to red. So just know that, right? I'm sorry, is this 188 level? Daily green, yeah, weekly's green, right? You're good. If it gets below 188, it's not going. That's what's cool. If it gets below 188, you know where it's going, right? It's at least going to 181. I don't think anybody here would question that. And if it goes below 181, it's most likely going to 158 or somewhere of thereabouts, right? Like that's the simplicity, right? For now, it's above 190. As if we move forward in time, right? Like tomorrow, this is going to be, so here's how it works. Like tomorrow, we have to take today's high, right? So if today's high is 196, right? You can say without a shadow of a doubt, it's not going up unless it's trading above 180, 196, right? Like if it opens up green, expect a little pullback. And if I want it to continue, I want to see this bounce off of 196. And I have a target. I could be targeting up to 205. That's going to be a legit trade, right? And where's your stop, right? Your stop, you could still use those same levels, right? From the one that you were using before. You can either use, right? Either your 193 as your stop, because you're not going to get that far back, right? But I'm going to be wanting to take something like that. And I could take, yeah, like $1, right? So this is a trade, right? I'm going to risk, what is that? I'm going to risk 1% to potentially make 4%. That's a 1 to 4 risk reward just on a stock, not option, right? That's good. At the same time, tomorrow, if it fails, right, this level, I'm going to have to, you have to take whatever that opening high is. That's going to be your stop. Your trigger short would be the break of down of 196, targeting initially here, but realistically targeting this level, right? 190, potentially down to 189. But you also know that, hey, look, I got two of these important levels showing up here. This should act like supply or demand. I'm sorry. At that point, look at demand, demand, demand. Could it pull back? Yeah, that's very likely. And then could I come back again, right? And wait for a break up, taking this to there? For sure, right? But that's how this trading thing works, right? You're just taking one level to the next. Hopefully that works. Or is it hard for us to take? Oh yeah. I mean, so you know, I think just the indicators, what you take out of this is should be the indicators. You know the setups, just know that those are 2 to 3 candlestick setups. What the most important thing for me, getting you this like understanding time frame continuity in terms of like having something available in chart, these weekly, daily pivots and monthly pivots, or levels rather, for specifically for options. Those are the levels that you want to be looking to take your trades off of because they're going to create the most momentum. If you're just day trading and you don't even have one of these weekly or monthly levels around, dude, the daily high low break, oh, that's huge, right? Like that's tradable every day, all day. I don't care what you're trading. But since we're trading options, we have so many different things to potentially take trades off of. What I don't want to
have you doing is really like if I've just added an hourly, right? Breaks. Like I'm not going to take a trade with a strat setup based on an hourly pivot. No, I'm going to watch for continuations, right? So that's how to find out, am I looking for the strat setups, like an actual signal, actionable strat signal on a 15 or 5? No, I'm going to trade off of these major levels, watching for continual strat setups as we go. And that's what I wanted you to take off of this. That's how I use it. It's like on a daily basis. I want to make sure that this is in my favor. And I'm constantly thinking, as you're trading this kind of setup, you constantly want to be thinking, is there a failed continuation, which should constitute a reversal, and the reversal is at the break of one of these levels. Just clean and simple as that. And I should either close out my long or flip to a short trade, however you end up doing it. That play wouldn't have stopped out since it came. Would not. Okay. Actionable shown in the box. I think I got everything. No, they don't teach us at school. But anyways, yeah, I hope that helps you guys. You got an email. It's jason@papergains.com. You can always find us at Paper Gains Inc. I think that's what it is. Is that what it is? At Paper Gains Inc. on Twitter. And in your servers, right? Just ping me at me in your chat. I'm super active. I love talking everywhere. I try to be as responsive as I can, but bear with me. I'm trying real hard. But anyways, you guys been awesome. Next Thursday, same time. Visit us on YouTube. Just subscribe to the channel. Paper Gains YouTube, whatever, and you'll get the updates on when we go live for the Monday weekly trade plan. And I think, Steven, did I miss anything? We were like way over, but it happens. I think maybe we even lost. I probably lost Steven. Yes. I love how that happens. I did. All right. Cool, guys. It's been real. I'll check you later.